Ever feel like picking the right fund is just exhausting? Some barely move your money. Others grow, sure, but management fees eat your gains alive. But what if I told you there's a zero-fee strategy so powerful it could turn $10,000 into $1 million portfolio, and it's built with just 3 of the best index funds out there? Sounds crazy, right? In this video, we're breaking down the 3 best index funds to supercharge your portfolio. One gives you exposure to over 9,000 companies across the globe. That's diversification on steroids. Another charges 0 management fees. Yep, 0.00%. And the last one, it's delivered over 18% growth per year. By the end, you'll know exactly how to turn a one-time $10,000 into a potential $2 million with no guesswork, no stress. Let's dive in. VT. This is the Vanguard Total World Stock ETF, and it's hands down one of the easiest, most diversified investments on the planet. It's what we call a lazy investor's masterpiece. Why? Because you don't need to pick a sector, or a region, or a strategy. It invests in the entire world. We're talking over 9,600 companies, spanning both developed and emerging markets, from Apple and Microsoft in the US, to Samsung in Korea, Toyota in Japan, and Nestle in Switzerland. If it's a major global player, VT probably owns a slice. You're not betting on which country wins the next decade, because with VT, you own everything. Sector-wise, it leans toward technology, followed by financials, healthcare, and industrials. But no single sector dominates. That kind of diversification helps smooth out volatility and gives you exposure to global innovation and growth. And here's the kicker, it's dirt cheap to own. VT charges just a 0.06% expense ratio. That's $6 a year on a $10,000 investment, cheaper than a fast food lunch. Now, let's talk performance. Historically, VT has returned 13.90% annually on share price. Seriously impressive for something this hands-off. On top of that, it offers a 1.30% dividend yield, with dividends growing at 2.93% per year. So you're getting both global growth and a rising stream of passive income. Let's run the numbers. Say you drop $10,000 into VT. No active management, no rebalancing, just a simple global set-it-and-forget-it investment. After 5 years, that $10,000 has doubled to $20,000, and VT is now paying out $262 a year in dividends. After 20 years, the portfolio snowballs to $180,000. That's 18 times growth. And the dividends? Now delivering $3,800 annually, or $320 per month. Enough to cover groceries, utilities, or even a weekend getaway. But if you hold tight for 30 years, boom, that $10,000 explodes into $870,000, nearly $900,000 from one lazy decision. And the dividends? Now paying $24,000 per year. That's $2,000 per month in pure passive income. The best part, your original $10,000 is still in there, multiplied 87 times. Bottom line, VT is the ultimate do-nothing investment. Global reach, ultra-low fees, reinvested dividends. It's a long-haul wealth-building machine that grows in the background while you live your life. Let's move on. The next ETF charges 0 fees and still brings the heat. Mind-blowing, right? Here's FZROX. If VT is the lazy investor's dream, then FZROX is the freedom fighter of index funds. Fidelity's Total Market Index Fund gives you ownership in the entire US stock market, from tech giants like Apple and Microsoft to small-cap companies you've probably never heard of. But what really makes FZROX stand out? It charges absolutely nothing in management fees. That's right, 0.00% expense ratio. No middlemen, no drip feed charges. Every dollar you invest stays in the game. Just pure, frictionless ownership of American capitalism, for free. Now, you might be thinking, okay, but where's the catch? Let's look under the hood. FZROX holds over 3,500 companies across every major sector. tech, healthcare, consumer goods, industrials, financials. It's broad, it's balanced, and it's not overweight in any one area. You're getting exposure to both blue-chip behemoths and small-cap rockets just waiting to take off. And here's where it gets spicy. Historically, FZROX has delivered an average annual return of 16.40%, higher than most S&P 500 funds, and well ahead of global ETFs like VT. If growth is the game, FZROX plays to win. Even better, despite being growth-heavy, it still pays a 1.17% dividend yield, and those dividends have grown at 4.42% per year. That's well above inflation, and a powerful bonus if you're reinvesting for compounding gains. Bottom line, FZROX is like giving your money a gym membership. It works hard, bulks up fast, and doesn't charge you a single dime. No fees eating away at your future. Just a pure, all-American growth engine, backed by thousands of companies and decades of momentum. Now let's run the numbers. Start with $10,000. After 5 years, it grows to $22,000 with $250 a year in dividends. Fast forward 20 years, and you're looking at $270,000. Dividend income? $400 a month or $4,800 per year. That's serious passive income. But here's the real flex. At 30 years, your portfolio is worth $1.5 million from one single zero-fee decision. And your monthly dividends? Now at $3,100 or over $37,000 a year, completely passive. That's rent, travel, groceries, and then some. You didn't have to pick winners. You didn't chase trends. You just bet on America and let it ride. Fidelity took zero fees, and time did the rest. Up next, the final ETF. This one doesn't just grow, it explodes. Triple Q. We had FZROX, the no-fee workhorse, then VT, the king of global diversification. Now meet the third piece of the puzzle, the rocket ship for investors who don't just want to grow wealth, but multiply it. Triple Q, also known as the Invesco Triple Q ETF, is the high-octane, growth-chasing beast of the trio. It doesn't try to own everything. Instead, it goes straight for the crown jewels of innovation. It tracks the NASDAQ 100 index, meaning you're getting the 100 biggest non-financial companies on the NASDAQ. Translation? You're riding with the tech titans, biotech pioneers, and media giants driving the future of the U.S. economy. While most ETFs spread their bets, Triple Q focuses hard. Over 50% of the fund is in tech, with household names like Apple, Microsoft, Nvidia, Amazon, Meta, and Alphabet leading the charge. You're not just investing in the market, you're investing in the companies that are the market. Now, Triple Q does come with a slightly higher expense ratio of 0.20%, but let's be real, it earns its keep. Historically, it has delivered a jaw-dropping 18.10% annual return. That's not just growth, that's compounding with a jet engine. And while Triple Q isn't known for income, it still delivers a 0.59% dividend yield, with payouts growing at an insane 13.34% annually. Reinvest those dividends, and you've got rocket fuel for long-term wealth. Let's look at what happens when you let Triple Q run wild with a $10,000 investment. After 5 years, your portfolio hits $23,000, and your dividend income rises to $140 per year. Not bad for doing absolutely nothing. At 20 years, the numbers get serious. Your one-time $10,000 has grown into $330,000. And the dividends? Now paying $360 a month or $4,300 a year, enough to cover a car payment, student loan, or a solid chunk of rent. But hold for the full ride, 30 years, and this tech-fueled juggernaut explodes into a $2 million portfolio. That's right, $2 million from just one $10,000 bet on American innovation. Your dividend income alone? $3,700 a month or $44,000 a year, enough to fund an entire retirement lifestyle. Bottom line, Triple Q isn't just another fund. It's a once-in-a-generation play for investors who believe in long-term growth and innovation. No gimmicks, no guesswork, just 30 years of staying the course, and letting the best companies in the world do the heavy lifting. There you have it, 3 index funds, 3 winning styles, VT for set it and forget it, FZROX for zero fees, Triple Q for explosive growth. Pick your lane, stay consistent, and let compounding quietly build your wealth in the background. Still hungry for more high-impact ETFs? Tap the video on your screen. We'll break down even more strategies that can take your portfolio to the next level.